It's awesome.
Just sliding some charts around. I have hit the record button so we didn't forget for 2020.
Good.
So for those catching the recording, welcome. I know a couple things we want to cover is definitely some of the new things that we've both found over watching the VA, and it's definitely an interesting one again this morning. Here we go. Get my chat. All right.
Is that the chart you showed me yesterday?
That is not yet. That's behind the scenes right now, I believe.
Ah.
Did you like that one? Did you take a little bit more look at that?
Yeah, I seem to catch every top and bottom, all the support areas. Really interesting.
Pretty amazing indicator, yeah.
I can't believe how deep this move has gone. I mean, we're down to 3.2 on the spread.
Yeah, we got to be so close to. I got a feeling that we're going to hit that 3 line at this point.
Could be.
And what are we at? 1270. Let me update my trend grid real quick.
Yeah, it's incredibly deep. I'm thinking. I mean, we had a lot of support around 3.4. 3.2 maybe could have some support there, but
let's see, there we go. Now we'll add one more for yesterday. Yeah, look at that thing way down there.
Yeah, on the futures I've got it at 3.2.
Oh, I believe it right now currently. Yep.
Yeah,
that's interesting. Yeah, we seem to be starting to repeat a pattern we saw earlier where it plateaued on the cross column.
Yes.
And we had this long negative where it did actually hit the oversold a few times, where the spreadsheet gave us the signals over here going over the negative 20s. It's looking very familiar again.
Yep.
So that's why I'm get this so it doesn't show that bottom line there. But yeah, if this actually happens in real time, that's what we look for another. But yeah, we're just filling out now and plateauing at 16 again with potential peaks here I've hit a couple times where we had a small upturn.
Right.
But we're back down to negative 20 again. And like you say, it's so strong I believe it's got to be part of this, not QE repo market injection of all the money going in and just the consistent rise of the markets.
Yeah, I think it's FOMO. People are just piling in, and I noticed yesterday that there was a large number of sell orders coming in at the end of the market, at the close of the market, the last half hour, and so yeah, I'm just keeping a real close eye on that.
Yeah,
a lot of the indicators that I'm using are just really negative.
Yeah, I did notice too, yesterday with all the activity with Iran going on and then the president's speech brought everybody back in, and it was so high yesterday. It seemed like one of those where whether it was intraday traders or whatnot, were just going to sell off at the end to take their profits. And yeah, it definitely took a dive.
Yeah. Yep, that's for sure.
Yeah, I was looking at for those that didn't see, this was our TSA alert for this morning, where we're, borderline continuation. It wasn't over at 25, but it was definitely looking like it. So we called for stronger to the downside, and it definitely followed through, where we're sitting at on the 4 hour a 0.20 right now. So that's a nice little move on the 5-minute chart there. Been looking at hitting this nth column. For those that didn't see the post, we have updated the scripts are in the VA masterclass, so you can get the VA bell curve, RBOS oscillator, and nth column, where you can actually adjust this. So this is actually looking at the 8th column now on this one. So
Right.
seeing that's almost hitting that peak there, that's a good exit sign. So that's a nice little 10, 15-minute move there.
Yeah, that's nice. That's a nice update right there.
And then speak of the one that Dave was talking about, I've been doing some studying over the holidays here, so I'll get the VA's charts out of the way, and I'll show you guys a indicator that I've put on this, and I'm using it in conjunction with everything else we already do. It's called Person's Pivots. And actually, it's interesting today because we had such a drastic move yesterday that they're much larger than normal. So
Yeah, what it does, the volatility will affect those levels.
right.
Yeah.
It takes into account the open, the close, the high, the low, where everything, then it draws these lines. Whereas the pinkish purple, whatever you want to call that, more of a pink to my eyes, is kind of the meeting where if we're above that, it's more of a bullish. And if it gets below it, you're bearish. And then these are support and resistance levels that it draws in.
Right.
So we have R1, R2, R3 basically, and then S1, S2, S3 down here. So what he's talking about, we had those major moves overnight. This actually came right to him and then reacted.
Yeah, that was weird. See, so we had this a little over 400 point decline on the Dow futures contract when the Iraq thing blew up. And then we completely recovered by the open. And then we went up 300 points. It's close to 300 points. So we had it's very, very unusual for the overnight market in the futures to hit those kind of really, really low levels without institutional selling, because you can't push those Dow futures down without heavy selling in the overnight. And so I'm thinking there's something more behind that. That's one of the indicators that we were looking at. There's more to it than just the Iraq situation.
Sure.
And
they're just using that as the excuse.
Yeah, exactly. The news, I typically hate following the news. So if the market drops on just a single news item, I don't typically like to follow that. But in this case, it was very, very negative, much more so than I would have thought based on the news item. Yeah, of course, we get a little bit of a sell-off, but not to that extent. I mean, you had to sell massive numbers of contracts to get the market down that low in the overnight. So I'm thinking there's much more to it.
Then they worked beautifully for, like you say, it was recovered by the morning. It rose above it, so you start to get a bullish tendency, and it bounced right off the support and moved right up, right through the first one, and then almost to the second line there. So I think the YM was the least one. Everybody else was almost dialed right into it. So if I go back to all four here, restore this back down and pull up like the ES, I'll show you the difference. But all four were almost in unison, all four major indices.
Yeah, exactly. The ES hit that upper pivot almost perfectly.
Look at that.
And hit the low, yeah.
And a lot of the ways I'm using these too is not so much entries to go the other way, but the way I'm using them is as profit targets. So if I'm in a long, and if I hit one of these lines, I'm taking profit off. So these are where I'm pulling off. So if I start with 3 contracts, I'll take the first one off, take the second one off halfway through. I won't wait till the whole lines, because this is a much bigger move than normal. So if we go back, historically, we can be taking 1 or 2 contracts off in the middle of these. It's just this might have room to go, or it might get all the way to those resistance levels.
Right.
So that's how I'm using these. And I'll pull up the study quick here just to show you. It is actually one that's just built in, so it's not one that we've created. It's actually a toss indicator called Person's Pivots.
Yeah, I believe the guy's name is John Persons.
Yeah, he's the same one that's got those arrows, right? The PPS.
Yes, very sharp guy. He's come up with some really nice indicators.
Then same thing played out, right at the open, you could take this long, it came up and hit, take contracts off, second chance, boom, boom. It's almost like clockwork.
Look at the close yesterday. So right at the close, we fell below that pivot.
Yep.
No, yesterday. So, or the day before.
Oh, the
So,
day before. Gotcha.
so it was the day that we dropped 400 points. Yeah. So right at the close there, you see where it dropped below that,
Yep.
and then came back up and it hit resistance.
Yep. Came back up, hit that midpoint, and dropped.
And then dropped right off. So that could have been an easy entry point with a very, very tight stop, just above that pivot. That could have been a nice entry.
Definitely. And if you're watching it, you could be taking profits off here, taking profits off. If you go all the way down, that's some major profits there. If you're playing, that's not even overnight yet. That's just 6, 7, 8 p.m. depending on where you are.
Yeah. Yeah, Keith, that's right. I did use the PPS. I do like Person's the PPS.
So there you go, Andre. It's Person's pivots, and I haven't looked at overlaying the arrows at the same time, but it might throw in the up and the down arrows. We could look at testing that, but just the Person's pivots alone they're pretty beautiful. Then as I have layered on down here the strong market price signals, where you can take them into account as well, where we see we were at the peak. And we got it started trailing down, which we're looking for, shorts at that point. We're above the cloud. And then they all kind of follow suit. And I've also started tracking volume at the same time, which is what we got in here. So I've been playing around with different combinations. If you see low volume, you trust it less, right? I mean, look at the volume overnight here. We never see volume like that overnight.
Massive. Yeah. So what do you think 2020 is going to hold?
It's interesting. I have this feeling, I don't know, it depends on how long the Fed wants to keep their machine running, right? Because with that, all bets are off.
Well, did you see the news about the permanent repo facility that Powell's proposing?
I have started hearing about that. I didn't read too many details on it just yet.
Yeah, very interesting. So it sounds like the temporary repo injections that started in September, of course, they've continued. Then they said, well, we're going to stretch it out to the first quarter. And then I saw another announcement they're going to stretch it out till June of this year. But then there was an announcement that he had proposed a permanent repo facility.
Wow.
Yeah, I know. It just absolutely blows my mind. So they're going to continue to print and print and print as long as they need to and keep it up as a permanent facility. Just on December 31st, they injected $64 billion just that night. The previous nights were about 30 billion. So they doubled it on December 31st. I think there was some issue. I forgot what it was now, but I think there was some payments due, treasury bills or something, bonds or something that expired. And so payments were due at that time. So they injected 64 billion. Now a permanent facility, think about what that means. We've had, of course, we had QE1, QE2, QE3, TARP, all of the money printing that's taking place since the financial crisis. The only time that they have stopped was the beginning of January of 2019. And remember what happened just before that. When they stopped, they actually stopped before that, which was December. The market dropped 3,000 points on the Dow going into Christmas in 2018, right?
Yep. Yeah, it was Christmas Eve.
That's the only time they stopped. So what are they telling us?
Yeah. Who's making this market?
Yeah. There is no price discovery in the market anymore. It's just completely gone.
I was trying to tell Jess that yesterday. I'm like, yeah, you should see this. I'm like, and I was also looking at, when those major moves happened.
Yeah.
Look at what these internals were also saying too, right? I know you saw it.
Yep.
But, I'm on today if we roll back to yesterday.
Yeah, they were all like borderline. They were right. I mean, there was no strength in there at all.
Yeah, there's nothing going on, and we got 700-point moves.
Well,
top to bottom.
Right. So think about the number of stocks that the advanced decline line is covering. You're covering, 2,500 to 3,000 stocks, and only 800 of them went up or 500 went up that day. So the other 2000 are down. But what the repo market and the injections and the money that's going into the market is going into those top tier stocks like the Dow and the S&P 500, top S&P 500 stocks. All the rest of the stocks are starting to decline significantly, but it's being masked by the indexes.
Yeah, it was just unbelievable. It's like we're hovering around zero, so there's like no volume moving anything. And the ones that are getting volume is still not much, but yet the indexes are just going ballistic.
Yep.
So then she says, well, how do you get to be that person that adjusted? I'm like, you have to have the right last name.
Yeah. Like Goldman or Sachs or Rothschild.
Yeah, I said Rothschild or, yeah. I'm having fun with, quote unquote, fun with my screens here. I've adjusted. So I'm trying to pull over my, the Dow SPX and NDX for you next to show that. And I know you had one too. We can wait a little bit if you want. That some activity you took at the end of the day. We were speaking of, the mini sell-off there. Yeah, here we go.
Yeah, you got that someplace. Did you do the same drawing I did?
I didn't do the same drawing, but we can definitely pull it up on what did I switch to, a 1 hour where I saw it easier?
Yeah, 1 hour. We actually went above it today. Very interesting. To me, unless there's here's what's going on this cheap money that they're making available is available to institutions, and they're just basically loaning it out to the like I mentioned, the top tier companies. So then they're all buying back their stock, and they're doing other types of financial engineering. It's just crazy. I can't believe that it can just, the market won't wake up to the fact that this is very much a bubble, very much financial engineering. And that's really all that it is, just financial engineering. And there isn't really any other way to describe it. Yeah, that little double top right there, which we just exceeded this morning, which surprised the heck out of me because I am long the VXX. And I've got about 1,000 shares on it, and I'm down $389, which is not too bad right now. Because I added to it yesterday. But I'm going to hold on to it just for a little while, see if we close. If we close below that line, I'll be very happy, and I'll continue to hold. But you know what? I was watching a video the other day saying that, hey, you know what? Traditionally, people who believe that the market is overblown and it's overbought and we're going to see a decline typically go into bonds, right? Is the safe haven play?
Right.
Well,
used to be.
Yeah, it used to be, but bonds are also in a bubble. I mean, we are talking about historically low rates. Bond prices are at all-time highs. And everybody, I guess, is, and I was of the same opinion, that we're going to see lower interest rates going forward. And so bonds still have a way to go up higher. The price of the bonds are going to go higher. However, I'm starting to think that we may have higher interest rates. We'll see. I really want to see how this plays out this year. And so bonds and stocks could end up going down together. That would be a first.
Yeah, then where does everybody go and where does all the money go?
Exactly. Bitcoin. Cryptocurrencies. It is the only non-correlated asset. I mean, you think about it, typically they go into bonds or commodities, but commodities have a high correlation to stocks this year. And so Maybe it'll go into oil. I mean, oil pumped really hard when we had this Iraq thing blew up, but it's backed off since then.
Yeah, there was a big move up, then it dumped again. So we're sitting back at 58.72 now.
Right.
And
So
gold was up
where's
over, gold hit over 16, then back down into the mid 1500s again.
yeah. You know, I was talking with somebody the other day, and they said, "Well, should I put my money in gold, or where should I put my money as a kind of a hedge against the economy?" And I said, you know, in 2008, 2009, I had put money in gold expecting that it was going to hit like 10,000 or at least 5,000, someplace between 5 and 10,000. And it didn't, which was very odd to me. And I did some research and I found out that central banks had been hoarding gold going into the financial crisis and then selling it like crazy. And so what the selling of the central bank's gold capped the price. It kept the price suppressed. And they needed to sell in order to increase their liquidity. If they didn't, they were going to be in trouble. So they hoarded gold before the financial crisis because they saw it coming, and then they sold during the crisis. So they're doing the same thing now. They've been hoarding gold since 2014. And if there's another financial crisis, they're probably going to sell it again. So it's probably going to suppress gold. Gold prices are probably not going to hit the levels that most people think they're going to hit.
Yeah, the only difference being, right, is they pulled off the rules and they can set whatever the price they want, so they're in complete control of it now.
Mm-hmm. Yep.
Yeah, I just noticed the NASDAQ obviously broke 9,000 a week or two ago, whenever that was, and it made the news. First time the NDX has been over it now.
Yeah, well, I mean, you can see it in the VA spread. It's like, man, that thing it's really rocketed. See, that's the FOMO. See, the technology stocks, and when the NDX gets overheated, I'm thinking FOMO, because most people will want to put their money into high flyers, just like they did before the .com era. You know, in 1990, 1997 to 1999, they wanted to get into those hot stocks, the ones that were going to do 2-3x. And it looks like they're kind of FOMOing again into the same technology stocks, or not the same technology stocks, but technology stocks again.
Well, and what is it? Not just FANG anymore, but I think there's a FANG man now acronym that of those 7, I think Danielle DiMartino, who we obviously follow, I think I saw her talking about this, where it's those FANG man stocks make up, what is it, 40% now? And there's not even enough money. That's why they've just went ridiculous to take in all the injection money, because that's where it's all going, is into those top 7, I believe it is, or 8.
Yeah, exactly. Yeah, that's right. I mean, you can't get any kind of yield anyplace else, and you can't. And dividend stocks are not real. I mean, dividend stocks are actually paying, but they're also kind of at an extreme high at this point. So you have to be very selective. But you can't get yield anywhere. I mean, you can't get it in treasury bonds. A treasury bill, 3-month bill, is 1.55%, which sounds, I mean, historically that's terrible, but it's better. I mean, it's risk free. So if you can get 1.55% in a T-bill, risk free, that's a pretty good place to park some money.
Right, exactly.
But if you can borrow it near zero as an institution, I mean, who cares if you ever have to pay that back? Nobody cares if you have to pay it back, because it's the zero interest, and you're making, if you can get, 13, 14%, 15%, 20% on some of these high flying stocks. Look at Tesla. Oh my God.
Oh yeah. I've seen a lot of people day trading Tesla, making a lot of money recently.
Yeah, that's absolutely insane. I mean, Elon Musk was like just battering and trying to hold back the short sellers last year, and now I haven't heard a word out of them about short sellers because they're all getting crushed.
Did you see him dancing?
No, I didn't see that.
There was something, he was overseas somewhere, and showing off something new, and he was actually dancing on stage. It was kind of scary.
I'm sure.
Yeah, they're almost to 500. I think they touched 500 overnight, just about.
Unbelievable. What do you think of his truck?
Oh my God, it's the ugliest thing ever made.
Isn't it gross?
That's my opinion.
Yeah, my opinion too. What do you guys think? Have you seen that truck? I mean, it is.
How many people got orders in for that new thing?
It looks like they took planes of sheet metal and just welded them together.
It looks like 8-bit graphics, and they made a truck.
Yeah. Yeah, something from the 80s, that you
like
do on a computer.
Yeah, it's from like Minecraft or something. For anybody that hasn't seen it, this is it. You want to go buy that thing?
What the hell is that? It reminds me it's like a toy that you play with when you're a kid,
I thought it was a joke at first. I'm like, are they seriously selling it?
So did I. I really thought it was a joke. I thought he was totally putting everybody on. And he pulled that out, and then he pulled out the real one, but he didn't. That was it.
Yeah. Like, okay, unbox this now. Let's see what's inside it. Nope. I'm like, oh my God. Flying off the shelf.
Yeah, that's horrible. There's no way I'm going to buy one of those.
Well, what's the cost on it?
Yeah, what is
starting at 40?
Around 40 grand?
That's actually surprising.
Yeah, I thought it'd be closer to 80 or something, but
yeah, he says that it's going to cost less than 50 grand is what he was quoted to say. Well, there's nothing to it, it's a couple of pieces of aluminum and
Did you see the video where the guy was throwing steel balls at the windows trying to break it? And
no.
You didn't see that one?
I haven't seen that one, no.
Or he was taking a sledgehammer or something. And so he was trying to show how hard it was to break these windows, that they were like reinforced or something. And so Elon Musk was standing there, and the guy who had the sledgehammer in his hand was standing there. And I forgot what he did. I think he took the sledgehammer to the body, and he made some pretty significant dents in it. And then he took the steel ball and threw it at the window, and it cracked. It cracked. It really almost destroyed the window.
And
Elon Musk is like, oh, shit.
It's like Bill Gates when the blue screen of death back in 95.
Yeah, exactly. I mean, he was just like, he goes, oh, well, we're still working on that. I mean, they didn't test that ahead of time to see if it would actually crack or not.
That's awesome.
Just insane.
Oh, there was whoops. I was just remembering too. I tested one of your theories that we were talking about. I don't know if it was late last year, if we were just talking about it between ourselves, but I'll pull over the 4-hour chart of the VA as it just keeps continuing to go down. Another item that you already alluded to, and maybe if you got a couple more up your sleeve that I don't even know about yet, but whatever the activity is, one thing that Dave had recently found, and I recently made some money off this, is you can put on a trade overnight based on whatever the previous day was. When did I do it? A couple days ago? I think I did it this day. Yeah. I think it was last week, where we had a big move down and the second half of the day was kind of down. So what, and Dave, please elaborate, but from what I've heard you talk about is based on what the move is of the day, it tends to continue overnight. So what I put on a short trade with the micros after the market reopened at 6 p.m. for me, 5 p.m. Eastern time. I think that's what it is, if I remember right. Mm-hmm. And just put on a small little micros trade, just let it run overnight. Then I closed it prior to the morning.
Yeah.
And made a little bit of money there.
Yeah, it's kind of nice because typically they move slowly overnight. So it's an easy way to use the micros to do less volatile trading. But yeah.
Yeah, based on the bias, I took it off, but hindsight's 2020. Would have been nice to leave it on. But yeah, so if you go back and historically look over time, whatever it does during the day, it tends to kind of
Reverse.
migrate.
Yeah, sometimes it reverses though. You have to kind of.
Yeah, it's not 100%, as you guys know. Nothing is, but it's just one of those tests. That's why we test it with the micros.
But yeah, I have done the overnight trade much more often than I have the open trades on the VA trade.
Yeah. So what do we have yesterday? I didn't even look at it yesterday, but yeah, with all the activity, I tend to just be very diligent if I'm doing anything.
Yeah.
So yesterday it ended up being, this was actually up
higher. Yeah.
Yep, and then it came back down. So yesterday wouldn't have been a good overnight trade because they were the same, right? They just basically cancel each other out. So if you look at it historically, it's open to close, it's flat. So I didn't put any trade on last night. But today we'll see if we continue down. We'll see where we close. If it's another, if we continue to slow burn all the way down to that 3.2, or who knows how far we're going to go.
Yeah, and so last night would have been a good one to hold into the open because of the continuation, the possible continuation there from the 4-hour chart.
Right.
But if you don't have that continuation, typically what I've been doing is getting out before the open, because the open will sometimes most of the time, I'd say 85% reverse what it does overnight.
Right. Exactly.
Except for today it was a continuation. So.
Yeah, that big move in the middle of the night, then added up. That's why I was calling for the borderline continuation. Absolutely.
Right.
And she's followed through. I was thinking about that just on a high level, right? So if we look at, I'll pull the sheet back up. If we're looking at, where this was historically were, so if we go back to 1, this is taken into account, about 4 years or so?
You got it all the way back to 2015 there?
So I think it's tracking back to, so this is 15, 16, 17. This is actually 5 years of data in here, right? Now that we've completed 2019, this is going back to 2015. And if we look at, levels, let me pull this up to like a weekly for a second over here, and I'll slide it over after. What we've done since all that. So 2015, looking at the indexes, the Dow was down at 16,000, and the NDX was 2015's here, about 4,000. Look at what that's done in that time. So we've ran everything up.
Wow.
And almost doubled. Obviously, we doubled the NDX from then, going from 4 to 9 almost. Just under 9, right at 9 right now. So that's obviously why the spread, so if you were, short, long, the NDX is overperformed percentage basis, which leads to this, with obviously the gyrations in between. And if we think about where we might go, like say 2020 to 2025 for the next 5 years, if this keeps continuing down, that's where you could easily see a $30,000, $40,000 Dow with a, I don't know, 20,000 NDX. Maybe the NDX will catch it.
Yeah. Yeah, I think that's possible because if they continue to print like this, then everybody's going to put money into the NDX, I think, rather than those stodgy old Dow stocks and old industrials. They want the high flyers, but what's funny though is that I was listening to CNBC this morning and a couple other people, and they were talking about how millennials are investing, and millennials are very, very wary of the stock market. Millennials now are starting to get into their peak earning years and also peak spending years. they're buying houses, or they're starting to have kids, or and where are they putting their money? And most of them are not putting it into the stock market. They're not.
Well, and the days of owning things are gone by the wayside. Everything's rental now,
Yeah,
as far as the millennials go.
that's right. Yeah, they're renting more often. Although my son just had his first child back in March of last year, and they were home over the Christmas holidays, so it was so fun to have them home. But they bought a 2-bedroom apartment in Boston, and now with the baby, and it's a 4-story walk-up. So
Wow.
but Boston is more expensive than Washington, which is like crazy. It's a very, very expensive city to live in. And but now they've got a baby, and I mean, walking up 4 stories with all the stuff they have to carry, the stroller and the groceries and all that stuff. So they're selling. They're going to be selling this year, I think, and they're going to be buying a house up closer to up the coast, northern coast of Massachusetts, and then commuting in.
Oh, wow.
Yeah. So
yeah, I couldn't even imagine doing anything, groceries or you name it, with that many steps.
Yeah, it's crazy. Yeah, it's absolutely crazy. I don't know. I don't know if you subscribe to Elliott Wave.
I haven't seen them recently.
Yeah, I mean, they're calling for, this is like the top of the market. Maybe one of the things that the Elliott Waves, it's hit or miss, in my opinion. I mean, I haven't seen them consistently call a top. They did call the bottom, though, to be fair, in 2009, in March, because I subscribed to them then, and they did call the bottom. They said that was a 5th wave of a 5th wave of a 5th wave. And they said that was the bottom. And they were correct in that. They're now calling, although they've changed the counting, the way they count the waves since about 2010. They kept, at that time, they were saying, oh, this is the top. No, okay, we're going into a 2nd wave or a 3rd wave. But recently, they've also been calling for the top of the market. Haven't seen it yet.
How many times have they called the top?
Since 2010. So it was 2010, it was 2012, it was 2016. They skip every couple of years. They revised their count in 2016. They did it again in 2018. And, so we shall see. Voltaire says, Dave, is that the image you posted on RTUS? No. Well, no, it's not. Yes, it is actually the one he just brought up, which we exceeded now.
Oh, the double top image?
The double top on the 1 hour on the Dow. Yes, that is the one. Now, there's another chart I asked what that was.
Oh.
On RTUS.
Oh, yeah.
Remember that one?
I don't think we've seen an answer to that one yet, have we?
Yeah, no, I'm holding back.
We had one guess. Andy thinks it's the VIX inverted.
Close, but no cigar. Here, I'll share my screen.
I was going to say, I can pull it over here if you want.
Oh, you got it? Okay.
Let's see if I can do it like this. And then do it like this.
There we go. We are now at minus 7.33. Did I send you, so I guess I can reveal what this is. So what this is the SPY minus the VIX. And this goes back to 2004, I think about 2004, maybe even earlier than that, 2002. Every time it's got up into that upper area, stocks become expensive. And when it breaks that trend line, you can see that they actually they decline very, very sharply. So we had a high back in 2016. We had or 2018. That was a big sharp sell-off there, and then we now we're back at that near that old high again. And every time it's gotten up into that area, and what this does is it represents a extreme oversold condition, or overbought condition rather. So the VIX is unusually low. The S&P 500 in relation to the VIX is extremely high compared to the VIX. And so what you want to do is, look for do some protective strategies if you have a long portfolio at these levels, because they can go on for a while. You can see the one from 2015, we hit that low. We went up and hit, higher highs until we got to, until we broke that line.
Oh, this one here?
Yeah, that one there, yeah. We kept going higher highs, but you can see every time it did that rounding pattern at the top, it just kind of collapsed.
Yeah,
just kind of kept going down. Yeah, little rounding pattern. Now, I shared with you the spreadsheet that I use. Didn't I have the SPY VIX spreadsheet?
You did.
Somebody asked for it, and so I sent it to them, an updated one. You might want to put that up on the members area if anybody's interested.
Yeah.
Because what it does is it measures it in real time. So whenever that ratio is 26 or higher, yeah, that one right there. And I sent out two. I hope you got the correct one. But anyway.
This is the second one, yes.
Okay. So yeah, so you, whenever that ratio, the price ratio gets to 26 or higher, anything between 26 and 30, typically that is like, you want to be protective.
So is that what's triggering here? I was looking at the formula here.
Yep. So I got it over 25, just as a warning that there's a potential here for the market to go down. When it's under 10, when that price ratio is under 10, that's the time to buy. I mean, if you're a long-term investor. So right in there, like 9, yeah, right in there, that is the time to buy. And you can see what happened as soon as we started hitting those levels. It hit 6.4, which is crazy. And then it just took off after that. Just went, you can look at the SPX price change. The very next day after it hit that 6.497, it went up almost 12 points.
Yeah, look at those. Just a couple minor days.
Yeah.
Huge.
Andre says buy puts. I don't know if I'd buy puts because they're going to expire at some point in the future, right? So, and you can't tell how long. This could last another several months while it's in the 25, 26 area. But what you might want to do is, if you have long positions on stocks, maybe sell calls instead. Or to generate some income, or at least have some protection, or maybe put even a strangle on them, which is selling the put and or buying the puts and selling the call on individual stocks. I would prefer that strategy over just buying puts outright. Or doing something like that.
I'll have to get my updated numbers in here.
I mean, if you're looking for a long-term market signal, this is probably the best there is. These trends tend to stay. I mean, once you hit that 26 level, and then you just kind of like either sell at that point, long stocks, or use protective measures like the strangle. It's not a strangle though. When you sell a call and buy a put, what's it called?
You're going to test my memory now.
Yeah.
It's been too long since I played with options, other than just naked.
It's not a strangle. It's anybody know out there? You guys remember what it's called? If you have a long position in the stock and you sell the call and buy a put, the sale of the call offsets the price of the puts for protection. I'm thinking of a strangle, but it's not. I don't think that's the correct terminology for it. But that's the strategy, and so you profit from the put if it declines sharply, and of course you make money from the call that you sold. And so what it does is it offsets. It doesn't offset 100% of the price decline in the stock, but it's pretty good. It's a pretty good strategy. Collar. It's called a collar. That's what it is.
That's one I never did, so I can see why I couldn't think of it.
Yeah, if you're a long-term investor and you've got a stock portfolio, this is probably one of the best strategies. If you don't want to get out of the stock, especially if it's, if it's paying a dividend or something, you want to, hold on to it. You sell the call above the, current price. Hopefully that offsets the cost of the put that you're buying long, and so it's protection. But yeah, it's called a collar. And then when that price ratio is under 9, you want to kind of load up again and take off all your collars and let it ride again. So long stock, short call, long put. Yes, that's exactly correct. Yeah.
So we've updated. We're at 24 as of yesterday, 24.1.
Mm-hmm.
I threw in the latest numbers while you were explaining there.
Okay, good. Yeah, so we're hovering around. We hit 26 a couple of times. We're kind of hovering around. So this, if you look at that chart again, you can see that those, and I had that on a weekly. That was a weekly. And so that's a lot of weeks.
Yeah. Yeah, you're looking at 5, 10, 15, almost 20 years of chart there.
Yeah. But every time it got up to that level, that means stocks are expensive, and we're above that today. We're at minus 8.7, and I do the ratio. So if you want to open up a new chart.
Yeah, I thought I had it, but I don't see that chart. That's one of the few charts I don't have yet, but I can definitely pull a new one up.
Yeah, it's the formula is, I'll put it in the chat here. It's SPY minus VIX. And right now we're at approximately, this is on TOS anyway, we're approximately at the 26 level. So that's what I like to look at. SPY minus VIX times 26. Because the spread, the price ratio is 26 at this point. So you want to adjust it for the price ratio. Just like we do the VA trade.
We'll go to just a daily. Yeah, 8.67. Is that what you got right now?
Yep.
Oops, go back. That's fine.
Yeah, that's the. So you can draw. Let's see, you can draw. Well, I had a trend line on there, and when we break that trend line, which is going to happen. Look at actually on the daily. I haven't looked at the daily. Looks like we've got a gap up there higher, but we're still at a lower high.
All right, stop jumping around screen. I love toss.
Yeah. Yeah, sometimes you have to click it. Yeah, I hate that too. Click.
Right?
Click. There you go.
Is my mouse working?
Yeah, right there. When we break that, watch out. Watch out.
Draw. There we go.
Yeah, so we got a little gap up higher today, but we're at a lower high than we were yesterday, which means, now remember when we were talking, I think just about at the end of the year, we're talking about the fact that the SPY VIX, when you see the relationship between those two start to be, as the market goes higher, but we have a lower SPY-VIX ratio. It means that large players are loading up on puts and selling calls, just like I mentioned as a collar. So, one of the reasons why the collar works is because that's what actually very large players are doing. So when you're selling a lot of calls and you're buying a lot of puts, they're using collars on their positions to protect themselves against a potential downturn. And so we've got a lower high there, but the market is going and making a new high. So we've got a divergence between those two. So that's what I'm doing. I only have a couple of long stocks at this point. But, that's what I'm doing on my positions, including buying the VXX.
Andre. It will be, Andre. I saw your question for the SPY-VIX. Is that what you're talking about? I'll be putting this up in the members area for sure.
Yeah, as a long-term investor, that's really the only chart you ever need. It'll tell you when stocks are expensive or when they're cheap.
All right, we're getting close to the top of the hour. Any other questions you guys got on our maiden voyage in 2020? Let's see what we're doing today.
Hey guys, I just want to let you know that I'm doing a wealth masterclass next week on Monday, Tuesday, and Wednesday.
Oh yes.
Dan is going to be doing the technical stuff, which I appreciate, and moderating. But we're going to go into some long-term passive income strategies, as well as some what I call windfall strategies, which have made me millions of dollars over the last 10, 15 years. And so we're going to talk about a lot of stuff, and specifically talking about not only windfall strategies, how to get $50,000, $100,000 in chunks at a time into your retirement account or your passive income account. We're going to be talking about how to select dividend paying stocks, when they're cheap, when they're expensive, how to do an evaluation. A couple of platforms, a new platform that I use that really makes the whole deal extremely easy. What I look for in a passive income dividend paying stock, and how it relates to real estate. And there's only one strategy that I use for real estate that typically works very, very well. But most of 70% of my free cash is in dividend paying stocks, which generates passive income for me, and why it's different than real estate and why it's better than real estate. And then, if you're young, and I'll say young is less than 40 years old. If you're less than 40 years old, you got a lot of time on your hands. And if you're older, you have experience, and I think you're really going to appreciate this, because really you can start at any age. I actually started kind of late. I hit about 40 and I realized that, oh man, I really don't have anything set aside for retirement at all. And I started putting a lot of my money into CHI, which you guys know about already. I talked about this a number of times. CHI was my favorite. At one time I put a chunk of money into CHI and I just left it there. And you know what it's done? That was in 2009, when at the bottom of the financial crisis, I saw it was paying like a 12% yield. It had a 12% yield on it. And I put a good chunk of money in that, and it has tripled. I haven't touched it. I haven't added any money to. Sometimes when it gets below 10, I've added a little bit of money, but I don't think I haven't really put that much into it. But it has tripled, and the reason it's tripled is because they pay a monthly dividend on the shares that you own, and that compounding, just the compounding alone, has doubled the value of that portfolio. It's pretty amazing. CHI, I'll actually bring up, before we close, let's bring up I do not recommend CHI at this point. if you can get a chart of CHI up there. Actually, in the main window, I want to take a look at the yield. Because the yield has the monthly dividend has decreased. It went from 9 cents to 8 cents. We're going to go in the master class. We're going to go into depth about why dividend growth is very, very important in the stocks that you want to invest in, but also what happens when a dividend decreases and what does that mean for the stock. So we had, if you go over to the monitor tab or to the trade tab, sorry. And you got CHI up there already. But type in CHI and then do the little down arrow so we can see what the current yield is.
1121. Oh, a little stinker. Where'd you go?
Oh, not that. Yeah, go back to CHI. Get out of that window. Now go down to the where it has the underline, not the trade grid. That one, yeah. So the yield right now is 2.85%, which is extremely low, and it's still a monthly dividend. But where is the
52-week high is 11 and a quarter almost.
Yeah, see that's high. Where is the dividend? You don't have that in there.
0.026.
Yeah, look at that. They dropped it significantly. So it was 0.09. It was a 9-cent dividend last year. They dropped it down to 8 in I believe it was November, December, and I sold it. And at the end of December, and they announced a 0.266 dividend. Now this is something that we're going to cover in the master class. Is that what happens when they drop a dividend like that? Now CHI is a mid-grade bond fund, and they do mezzanine financing and stuff like that for businesses. And they have about 750 businesses in their portfolio, corporate bonds. And they say drop their dividend. That is a horrible sign for the economy. When they drop their dividend, it means that those corporate bonds, these mid-grade bonds, these are triple B. They're not the highest grade, and that's why they've been paying out a pretty high dividend. The yield has been closer to 8 or 9%. Now it's only 2.85%. They cut the dividend because more of those corporate bonds in the triple B rating level are defaulting. This is huge. And so that spells trouble, real trouble for the economy. Andre, the first master class starts on Monday, next Monday, the 13th. It's 13th, 14th, and 15th. If you're signed up for the live ones, if you can't attend them, they will be recorded and you'll be able to get them, but you have to sign up for the live one in order to get the recordings. I'm not selling the recordings separately. They won't be sold.
Yeah, so to be clear, guys, this isn't something that's going to be on the Tradinology member site. This is something Dave's doing personally. So definitely take advantage of his knowledge.
Yeah, exactly. It's not going to be on Tradinology. The recordings are not going to be available. You have to sign up for the live class. I don't know if I'm going to be doing another one, but if you sign up for the live class, you get the recordings. Good.
Yep. So Monday, Tuesday, Wednesday is when they're going next week, Andre.
All right, guys. It's great to see everybody. Have a fantastic weekend, and we'll see you next Tuesday.
What time Monday? Are you doing 11 o'clock Eastern?
No, they're going to be 1 p.m. Eastern time on Monday, Tuesday, and Wednesday, and a link will be sent out to everyone who's registered.
So there you go, 1 Eastern.
Last time to sign up will be Sunday night at midnight. This Sunday, midnight Eastern time. That'll be the last registration.
And I'll include it with the recording and stuff when I post this for the members.
Okay, cool.
If you want to shoot me that link too. I think I have it, but just to make sure I give them the right one.
Yeah, actually, I just put up a new page with a video that you guys can go check out. I did a video recently.
Perfect.
I was driving in my car. Did one of those drive videos. It was kind of easy because I just find it easier to talk, I think, when I'm driving or something. I don't know why.
As long as you're not in rush hour traffic around DC, you're fine.
Yeah, it's funny because in the video I said, well, I've got about 10 minutes before I get to my destination. And so the video went on for 18 minutes and I was on the New York State Thruway and I missed my exit. And I went to the next exit and I went to pay for the toll. And I gave the guy 45 cents because it was a short trip. And the guy says, it's 90 cents. I said, what? I missed the exit completely talking. I wasn't paying attention. I missed the exit. I went to the next one. I had to turn around and go back.
Nice. That's funny.
It's funny. It's a little insider. What do you call those when a blooper?
Rio.
Yeah. Anyway, guys, have a great weekend, and we'll see you guys next Tuesday. And Monday, if you're signed up for the masterclass, Dan and I will be on. Dan, appreciate that help very much. We need to practice that. Maybe I don't know. Maybe tomorrow afternoon if you got a chance. If you got time.
We can make something work. Or did you still want to chat later on?
Today?
Yeah.
Oh yeah, we can do that. Well, actually, I need to run out. What time are you going to be available later this afternoon?
Hit me up on the WhatsApp and we'll figure it out.
Okay, sounds good.
Thanks
Everybody. Have a great weekend.
All right. See you guys.
Bye.